Katie, welcome back. Great time
Thank
to
you.
have you.
Good to be
Um,
with you guys. A lot going on, right?
Yeah,
yeah,
welcome back,
market,
Kate.
yeah, market history, major moves. What's top of mind for you post-election and pre-Fed?
Well, I will say that, we always hear about selling climaxes, but what we don't hear as much about are buying climaxes. So that's what I think we really need to think about after seeing yesterday's reaction. The
Yeah,
market was, or the equity market was definitely teed up for a rally around the election. We had a short-term oversold reading for the S&P 500, and the VIX was a little bit overbought. So here we have it, and we're a little bit suspect on its sustainability. So now what we're going to do going forward is basically watch the
yeah.
gap. So,
Okay,
so
can you share your screen? And I remember many moons ago, Katie, that there was a measured move off the breakout at 4,800 that targeted 6,100. If you
right,
just
yeah,
took that range.
that's
And
right. That did. And listen, like we're not terribly far from that. A more
right.
recent breakout targeted, and this was more of a short to intermediate term objective, was about 59.35. And certainly now with that sort of in
Yeah.
line, we do feel like we're a little bit skeptical as to how this will unfold. We're not seeing it as a big breakout unless, like, if you look at the Russell 2000, it does look like a breakout. So we'll look at that chart too. But this is the
Okay.
S&P 500 index on a daily cloud chart, and you can see the gap. So
Yeah.
we're watching now going forward the bottom, or I guess really top of the gap, and that's roughly 58.65 for the S&P 500 cash index. So as a very easy thing for folks to watch at home in the next few days, if we do see the S&P come into that gap, that usually is a setback. It usually means that we will see that gap very quickly filled because there's
Yes.
a sort of a lack of supply in that gap. And if that happens, we'll likely see downturns in our short-term metrics, and things will start to look pretty tenuous. We have presently a neutral short-term bias, but if we did see these downturns unfold, which we suspect may happen, we would be pretty quick to position for a significant pullback. If you see the
How's
DeMark indicators, yeah, you see there's a 12. For those of you that know the DeMark indicators, we could see a DeMark 13 today for the daily S&P 500 chart. And that's something that usually would support 2 weeks of consolidation at a minimum.
okay? So interesting. Uh, what do you think that the catalyst for risk appetite, like we've been talking about here, Katie, is that even if yields pull back a little bit, that yields are heading higher, and that's something that no one was planning on, including Powell?
It's really interesting. I know, of course, we have a Fed meeting today. It feels like we're getting sort of piled upon in terms of
Yes. Yeah.
events and market moving news, right? So we have, I don't know if it's an out of consensus view on yields, but what I will say is in regards to the correlations right now, they're
Yeah.
all out of whack. Right. We've had such huge swings. This is the 10-year Treasury yield on a daily bar chart. These big swings, it takes a long time for these moves and yields to really catch up with market fundamentals and macro takeaways, right? So because it's been so almost directionless from a longer term perspective, you can see that in the flattish
Yeah.
200-day moving average. I think folks don't really know what to make of that. They don't know if rising yields should be positive or negative right now. And, certainly that could apply to the banks in particular, which had a massive move yesterday. So
Yeah.
we're seeing sort of a disjointed correlations between yields and equities. And so we're not going to rely on those. Rather, we'll just kind of look at yields independently and make a conclusion. And, that can
You
obviously
think we're
be
going to pull back down to the cloud?
I do. Yeah. And that's why I
Okay.
brought up this chart because
Right.
here too,
Okay.
the DeMark indicators are really, really kind of loud and clear. you have, as of yesterday, with this big up move, one of these counter trend indications. This was the last counter trend indication, which was quite timely. And
Right.
so was this one. So we feel like we have this, explosive rally in yields, which in and of itself is more likely a counter trend move. When you get that kind of sharp up move, that's more likely counter trend, with the DeMark indication that it's now overdone after yesterday. So we think it'll come back in there. You could argue there's maybe some support at the 200-day. That's at
Four.
419. But we
Okay.
think there'll be a bigger retracement, bringing yields back below 4% into this cloud-based support. Now, though, we originally were calling for the low threes, and it's looking increasingly less likely. And maybe we'll see a higher low relative to September, which was around 3.6.
Okay, so it looks fairly analogous to the dollar.
Hmm.
Because the dollar, I think that we're going to get a pullback after the spike that we had to clean out all the bears um, with yields. And yields, if there's one tight correlation, Katie, it's been US dollar yen with the 10-year.
Oh,
The
yeah, yeah.
charts are almost identical. So, um, yeah, I'm with you on that. Do
Hmm.
you think
Hmm.
that might be the period where yields come down, where S&Ps begin to correct?
I think so. We are looking for a correction to unfold before year end.
Okay.
And with that in mind, of course, we would be looking for better selling opportunities in equities. With that, we
Okay.
do think we'll see yields and the dollar come off. The signal here on the dollar index at same 13, it
Yeah.
was registered a couple weeks ago. And it still gives you kind of that sense, right, that it's overdone in the same way that this was
Right.
overdone on the downside, and this here too overdone on the upside and back here as well. So you can see how timely these metrics have been.
Yeah.
And that gives us some conviction in the directional bias there. The euro
Two
looks
and a
like to
half. Two.
strengthen. Hmm.
Yeah. Right around 102.5, you have your confluence with the moving average in the cloud. That would
That's
make
exactly
sense.
right. Yeah, that's right. So there's the 50-day moving average in the cloud, which you can see rising into year end. So perhaps it's not that dramatic as a retracement, but it does look like a retracement is likely. And I'd keep in mind that for yields, the reason we don't think it's done yet, yields and the dollar, this is the monthly chart. So this is our framework, right? Look at this monthly MACD. It's still pretty decisively negative or deteriorating.
Yeah.
So we don't think that there's going to be any kind of immediate and prolonged, sort of resumption of this secular uptrend back here.
Okay. All right. So, when I feel the same way, like you revise your yield narrative, the
Hmm.
persistence of, I was dollar bearish, but it was so persistent, this rally in the dollar, that if we do get a pullback, I think you have to buy it, and maybe the Dixie has 109 in it. Could you
Yeah,
make a
and
case for that?
well, we did see with the relief rally, right, the explosive relief rally, we've seen the monthly stochastics turn up. So that would suggest that indeed, yes, we could see a higher low, and
Yeah,
that the September low will prove to have more importance than we initially thought. So we're aligned
right.
with you, it sounds like.
Okay.
This is
You
pretty
made a
interesting. Yeah.
yeah,
This is
you made a great call, Katie, on gold silver ratio about a month before we had one day where the gold silver ratio completely collapsed. I remember because I
yeah,
was on the other side of it. I was looking for a breakout to the upside and a move to 93. Um, we've retraced almost that whole move on the gold silver ratio.
that's
Um,
true. Yeah.
so what are you still in favor of it? This might be
So,
a good
you know,
time to put it on.
I think almost like silver is to gold as ether is to Bitcoin.
Yeah, yeah,
It's like sort of like, just a higher beta version of the same. So when they're working, I feel like we see outperformance from silver, but when you're seeing the
right.
pullback, you do tend to see underperformance. So I think with a consolidation phase still likely, we have been calling for consolidation in both in absolute terms And we have indications that that consolidation could last more than a few weeks. This is silver on the weekly bar chart. You see a demarket
Yeah.
issue there. So that would
Right.
suggest we have maybe another, I don't know, 8 weeks of consolidation in store. We're still very comfortable having exposure to silver and gold throughout
Okay.
consolidation, but they've had such good runs. And during that period, yes, you might see gold do a bit better just because I think it's seen as the safer haven, much like
Yeah.
Bitcoin would be versus Ether. And
Right.
this is the long term, the monthly chart of silver. Look at this momentum here. So this is why
Yeah.
we are comfortable holding on to a long term position. It looks
Okay.
even more compelling to me than some of the equity indices out there.
Okay. Where's your red moving average coming in on
So
that last
this
chart?
this is the stochastic oscillator and this is the MACD.
Right.
This moving average is simply the 12-month moving average. So it's
Where's
really
it come
just,
in?
yeah, it's not, oh, where is that? We're not usually using it as a support level.
That's my target at
Yeah,
28.
27.87. But I love how it
Okay.
just gives you like a good sense of the prevailing trend because the
Yeah.
cloud model you see on the monthly is often a bit too far to be super helpful.
Okay. Uh, Energy. Why don't we talk about energy? I know that you're constructive on natural gas. Is that
hmm
correct?
Yeah,
Okay.
so as a counter trend, listen, with any kind of counter trend positions, you're holding more risk, right?
Yeah.
We have been, I guess I'd say, underweight the energy sector. So looking at the equities, this is the energy index versus the S&P 500, and you can see why we've been more comfortable being underweight. So in relative terms, it still is not an attractive sector. But there are signs of life. I mean, if you look at this benchmark here in particular, look at the support. This is the weekly cloud-based support
Yeah.
seems to be holding. So I think you take the energy stocks really kind of individually and evaluate them and just make sure that they're managing to hold support and that you can make a strong fundamental case for them. For crude oil, it's been such an exercise in frustration, and usually when that's
Yeah.
the case, it's a trading range, right?
y- Yeah.
So we are kind of honoring the trading range for now, but it has a lower bias, and I'll pull up that chart too. But it does have lower highs in place with sort of weakened long-term momentum. So we're not very constructive on crude oil as another
Okay.
sort of indication to be underexposed to the energy complex. But this nat gas is very interesting. It's hard to find an equity that looks like this, but you can see almost like the longer term turnaround. And we love the cloud model to this end, where sometimes you'll see a breakout like here that
Yeah.
isn't quite decisive based on where there was a sort of a standard resistance zone. So the cloud is telling us that it's already reverse coursed. I like that we see the
Yeah.
cloud-based support hold and these corresponding upturns. So we're pretty encouraged by natural gas. It's not for the faint of heart, of course, because it's still kind of technically more of a turnaround, right? You see the monthly MACD having really turned the
Yeah.
corner. If you keep this monthly MACD in mind and we pull up crude oil, and you'll see the difference. And of course, most of the equities are more closely tied to crude oil than natural gas. So
Yeah. It's hard to find pure plays in natural gas, isn't it?
it really
Besides
is, yeah.
natural gas.
Yeah,
Yeah.
and we
There are royalties like there are in metals that they pay you to
mhm,
own them. There's a
yeah,
yield on them.
yeah, it's
And
interesting.
yeah, royalties. A lot of people did pretty well with uh, precious metal royalty companies where they didn't have the operation risk, or a lot of them have no debt because that's
hmm
what they are as a royalty. It's just, I've been hunting, you could tell.
Yeah.
So,
Yeah, it's really interesting. If you find any good ones, let me know because
okay,
it's hard to
Katie.
find. I usually just tell our clients to invest in UNG or something like
Oh,
that. But,
yeah.
I know full well that that's not necessarily an ideal way to
Oh,
go about it. You obviously have fees embedded there. This is
I'll,
crude oil on the monthly
okay.
chart. This is
Yeah.
you see the MACD looking really quite different
Yeah.
and more range bound overall, but with lower highs.
Yeah.
somewhat oversold. But this long-term support, it's like sort of the low to mid 80s. It is pretty meaningful as support. So perhaps that keeps a bit of a floor under crude oil.
Yeah. Think it wants 62, but
Mhm.
just a guess. Anything else that you're paying attention to that I, may have missed? And an appearance on CNBC that you gave another great call to.
Oh, well, thanks. I'm watching the VIX. This is pretty interesting. Yesterday, look at this is the daily chart of the VIX. This is another thing that we want
Yeah,
to keep an eye on. We've believed that it's moved into this higher volatility cycle. And look at this
interesting.
move off of a 9 sell right back
Yeah,
into the 200 day. So this is a real sort of pivotal place, I think, for the VIX and potentially for the market if it does indeed discover support again, like it has done during this higher volatility cycle. Then we probably have some real volatility in store, even in the next 2 to 3 weeks. So this is something we'll be watching. Also, be keeping an eye on this gap, which is at 1682 for the VIX. So that'll be something that we're watching. And I can't not mention Bitcoin because
oh yes,
that was quite a move yesterday. And you see
yes,
Coinbase here up 31% yesterday, which is just wild.
yeah,
That strikes of being overdone. But even still, this is potentially a real breakout for the price of Bitcoin. So we've
yeah,
been watching this pretty closely. And, we always love to have that confirmation 2 decisive weeks above a down trend line or some resistance. And that has the potential to happen this Sunday when
yeah,
Bitcoin rolls to the new week. So we'll be watching that really closely. If it retraces a good deal and comes back below, it will fail to do that. And that would be obviously informational. But
yeah,
it's looking good for a breakout. And I think it's going to be meaningful because if you it had already cleared these highs back from 2021. So there's
yeah,
no resistance to hold back Bitcoin at current levels. So assuming that it can confirm this breakout, it doesn't share in any of these longer term DeMark issues that some equity benchmarks do. If you look, this is the monthly. You can see that the DeMark indicators are fine right now.
yeah,
So I
yeah.
think it's compelling, and
100,000, 120 is actually what that formation measures. It was kind of like a big bull flag
yeah, almost,
breakout,
yeah,
right?
or like a cup and handle. You could see
Yeah,
that here.
yeah,
So
yeah.
it's a pretty classic technical setup. The breakout just needs to confirm in our work, and then I think we'll get more constructive on it. We've been more like neutral to negative kind of throughout this downtrend
Okay.
channel.
Well, if you don't learn how to change your mind, you won't have any change left.
It's a good way to put it.
I know I've experienced it. So anyway, stubborn Dale. So is Coinbase your proxy for how you trade Bitcoin?
No, I really use Bitcoin itself when I'm
Okay.
evaluating them. And now we have all these great ETFs to
Yeah.
use, but I always pay attention when you see such a massive up move. Arguably, you could say, well, Coinbase should be extended, but when you frame the 31% move, note it
Yeah.
has a 13. It actually doesn't look too crazy. I mean, we were
Yeah.
there back in July, so it's just
it-
a super high beta name. But so we
yeah.
like to look at a collection of things as not to get too hyper focused on just one security.
Okay. Well, we're heading into the end of the year. How has
Mhm.
your ETF performed compared to the market?
It's been great. So in Q3, this is the TAC ETF. It was the number one performer in its category, which is the Morningstar US.
Congratulations.
Yeah, thank you. We're thrilled
Yeah,
about that.
that's
It's
great.
the Morningstar US Tactical Allocation category, which is actually pretty mishmash in its construction, but even still, we're glad to it be shining in that type of environment, beat the S&P 500, course, beat our benchmark with that in mind as well, which is the Morningstar Moderate Target Risk Index. It's basically an alternative to a 60/40 type of portfolio. And that
Right.
indeed is almost what TAC looks like over the history of its model is something like a 65/35 type of portfolio, but there's that gold component in there. That's a differentiator. And
Yeah,
the gold
that
component,
helped.
yeah, it really helped, especially in
Yeah.
2022. It helped give us some nice outperformance then. So steady as she goes. The goal with tech is not just to obviously, participate on the upside. It's to really protect on the downside and to have
Yeah.
a lower correlation and lower beta, which advisors seem to welcome.
And the symbol on that again is TAC,
So
TACK, right?
TACK, and it's the
Okay.
Fairlead Tactical Sector ETF.
All right. Katie, always a pleasure and very edifying to talk to you every time we
Thank
get
you.
together.
Yeah,
And
same here, Dale.
all right. Well, Katie Stockton, everyone, follow her on X. You have to. That's Stockton Katie. You'll see her on CNBC. I think you're the best analyst that they have on, and
Thank you so much, Dale. That means a lot.
my volume always goes up dramatically
That's
when
good
you're
to
on
hear.
there. All right, so
Take
thank you so
care.
much, Katie. I'll
You're
talk to you
welcome.
next year.
Yep, sounds like a plan.
All
Take
right,
care. Good luck.
Katie Stockton, everyone. Take it easy, Katie, and you can
You too.
join. All right, and you can join Blake and the team in 20 minutes on the morning edge. I told you that Katie would clarify everything. So a lot of gaps she talked about. Tell me that content's not going to help you going forward into the Fed and over the next week or so. So that's what FACE is, you know what it stands for. ForexAnalytix Community Experience. Who had a good experience today being in FACE? Give me a why. Did you, Sinatra? Who? Only one? Everyone did? All right. Who had a good experience that's hasn't even tried a trial yet? Because that's what you have to do. Because election night was crazy in the room, and a lot of guys were short euro on the election. And that's a wrap for me. Don't just count your pips, count your blessings. And we'll wrap it up tomorrow. TGIF tomorrow, everyone. I'm ready. All right. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.